So you are staring at the checkout screen. A $540 challenge fee is just sitting right there in your cart. You have to ask yourself, is this actually a smart move for my trading career, or am I literally just about to throw my hard-earned money away? Welcome to today's Explainer, where we're going to break down the exact real-world mathematics of prop firm trading.
Here is our roadmap for today. We'll be looking at the real cost of failure, reaching that all-important break-even point, comparing retail versus prop firm math, the massive power of account scaling, and finally exactly when you should wait versus when you should pull the trigger and start. Let's dive in.
Section 1. The real cost of failure. Let's get a quick reality check.
Now, that $540 fee you're looking at, it buys you exactly one thing. One single attempt at Phase 1 of a $100,000 FTMO challenge. That is it. If you pass Phase 1, awesome. You move to Phase 2 at no extra cost. Pass that, and boom, you get your funded account. But if you fail Phase 1, yeah, you've got to pull out your wallet and drop another $540 to buy a brand new challenge and try all over again.
And here is where we need a really stark reality check. The industry pass rate for first-time attempts, it sits around just 5 to 10%. Think about that for a second. That means 90 to 95% of traders who buy a challenge fail on their very first try. Why? Well, because most people are simply not prepared. They get too eager and jump in before thoroughly backtesting their strategies, or before building the absolutely crucial discipline needed to actually follow their own rules when the pressure is on. Let's walk through a highly realistic scenario of your average trader. Attempt 1 costs you $540, and you fail. Attempt 2, another $540. Failed again. Okay, attempt 3, you finally pass Phase 1, but then you fail Phase 2. Another $540 gone. Finally, on attempt 4, you nail both phases. You are funded. Fantastic, right? But look at the bottom line here. That original $540 fee is quietly compounded into a $2,160 total investment. It adds up extremely fast.
Section 2. Reaching the break-even point. Let's see when you actually start seeing some profit.
Let's assume a super conservative 3% monthly return on your newly funded $100,000 account. That generates about $3,000 a month. With an 80% profit split, you naturally keep $2,400 of that. But check out month 1. Your payout is actually $2,940. Why? Because the firm refunds your most recent $540 challenge fee. So even after subtracting your massive $2,160 investment from those 4 attempts we just talked about, you're netting over $1,300 right out of the gate. By month 3, your cumulative net profit is over $6,100. You've fully recovered all those failed attempts and built nearly $4,000 in pure, unadulterated profit. That is a huge turning point.
But hey, what if you had a much rougher start? What if it took you, say, 10 failed attempts? That's a painful $5,400 out of pocket. Honestly, even in that absolute worst-case scenario, you would still break even around month 2 of being funded. Once you pass and actually maintain that funding, the income stream dramatically overpowers the cost of your earlier attempts.
Section 3. Retail versus prop firm math. Let's look at a 12-month comparison.
Now, what's really interesting here is the massive difference when we look at a one-year period, again, assuming that conservative 3% return. A personal retail account starting at $5,000 slowly, painfully grinds up to just $6,800. But through a prop firm, that $2,160 initial investment in challenges turns into a staggering $26,640 in net profit. The difference here is absolutely night and day.
Let's put that into perspective as a percentage. For a successful prop trader, you are looking at an annual return on investment of around 1,233%. I mean, you simply cannot find that anywhere else, short of hitting the lottery. No standard stock market index, no real estate deal is going to return 1,200% in a single year. The ROI is just astronomically high simply because you're trading large capital that isn't yours while keeping the vast majority of the profits.
But, okay, hold on. We have to address the critical caveat here. This incredible return, it literally only applies if you actually pass the challenges and keep your funding. If you attempt 10 challenges, never pass a single one, and blow $5,400, well, your return on investment isn't 1,233%. It's negative 100%. You lost everything. The potential for high returns is inextricably linked to the very real risk of total loss if you can't pass those evaluations.
Section 4. The power of account scaling. This is how you really grow your capital.
Now, if you show consistent profit, a base $100K account automatically scales up to $125K in just 4 months. At 8 months, it grows to $156K, and by 12 months, you're trading $195,000 account. Think about what that means. Because you have way more capital to work with, your take-home pay increases significantly, even while you're just maintaining that exact same low-stress 3% monthly return.
And you definitely don't have to stop at just one account. The true trajectory to a sustainable 5-figure monthly income involves running multiple accounts. Once you're funded and you've been consistent for a few months, you can easily purchase a second challenge. Within 18 to 36 months, you could realistically be managing 2 or 3 simultaneously scaled accounts, pulling in $10,000 to $15,000 a month.
Zooming out to a 5-year projection, it really puts things in perspective. Sticking strictly to the retail path means that after 5 years of perfectly compounding your 5K account at 3%, you're making about $885 a month. Now compare that to the prop firm path, where managing multiple scaled accounts generates $15,000 to $20,000 every single month. If you have a proven strategy, the difference is truly life-changing.
Section 5. When to wait versus when to start. This is the ultimate decision framework.
Look, a challenge only makes sense if you meet these very strict criteria. First, you need a 100-trade backtest showing a minimum positive expectancy of 0.25R. That means you're averaging a return of a quarter of your risk per trade. Second, you need 2+ weeks of demo practice with absolutely perfect rule compliance. Third, you must have a clear, written trading plan featuring all 7 core components. Fourth, a deep, thorough understanding of your specific prop firm's rules. And finally, you have to know for a fact that a $540 loss will not create any financial stress for you. If you check all these boxes, mathematically, you are favored to succeed. On the flip side, you need to wait if you have no verified back-tested strategy yet, or if you're still just kind of experimenting with different approaches. If you haven't practiced consistently on a demo account, or if losing $540 represents real, significant financial stress for you, trying a challenge right now is literally throwing your money in the trash. Trading with money you can't afford to lose creates this immense psychological pressure. And that pressure inevitably leads to emotional decisions and rule violations. Seriously, build your strategy first and learn those expensive lessons for free on a demo account. Just a quick note on choosing a firm, too. While an FTMO challenge is $540, alternatives like Funded Next or the 5%ers offer cheaper entry points, usually ranging from $249 to $449. But remember, cheaper doesn't automatically mean better value. If a cheaper firm imposes strict time limits that put immense pressure on you, trying to save $90 might just cost you the entire fee because you're forced into making frantic, rushed mistakes. A slightly higher upfront cost often buys you much more forgiving rules and the absolute luxury of unlimited time.
So what does this all mean? The life-changing math we explored today, the fast break-evens, the incredible scaling, the massive ROI. It literally only applies if you can look in the mirror and honestly answer yes to 2 simple questions. Do you have a proven strategy, and can you execute it with strict discipline? If not, do yourself a favor and keep your money in your pocket. Thank you so much for joining me for this explainer. Build your edge, protect your capital, and I will see you on the next one.